Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 18th of January, 2022. Alright everyone, let's get into it. So today, Evan Van Ness and Josh Stark published their Year in Ethereum 2021 review blog post. Now, this is quite a lengthy read here. It goes through everything that happened with Ethereum in 2021, from DeFi to NFTs to protocol upgrades like EIP 1559 and all that good stuff there. Now, obviously, I highly recommend going and giving this a read if you haven't yet. I read it earlier today, and honestly, as I kept reading, I just kept getting more and more excited. Like, it's always well and good to kind of like talk about what's happening from day to day, as I do on the refuel, but then kind of like doing a retrospective and looking back at what happened in 2021 and kind of like going through all the metrics and seeing how much success Ethereum had in 2021 just got me super pumped up. And then, towards the end, you kind of like have things about like, what's happening this year going forward, stuff like the merge, layer twos, and I just came away after reading all of this just like super pumped for, the past, present, and future of Ethereum, really, at the end of the day. So I highly recommend giving this a read, but I did want to talk about a couple of things here. I think what stood out to me the most, just scrolling through here, was things like total transaction fees. Now, I know layer 1 fees are high, and it's kind of like funny how it's the thing that Ethereum is most criticized for, but it's also the thing that I think is most bullish when it comes to Ethereum, is the fact that last year, in 2021, people paid a total of $10 billion in transaction fees in 2021 to use the Ethereum network. Now, I'm pretty sure this kind of like most of this kind of, I guess, happened towards maybe the end of the year, or kind of like the last 6 months of the year. The first 6 months were high, but not as high as this. And then you can kind of see here that how it compares to Bitcoin. Bitcoin only did $1 billion. So Ethereum did 10 times the amount of fee revenue as Bitcoin did. But and if you kind of like take that as a dollar terms, Ethereum's market cap, ETH's market cap is I guess less than half of Bitcoin, and then kind of like if you kind of like extrapolate that out and kind of do that over all of 2021, it becomes even more pronounced. And the reason why I bring up market cap is because you're measuring this as ETH USD value and BTC USD value. So obviously BTC's USD value is higher. So the fact that Ethereum is kind of like 10 times greater, even though it has a much less, not much less market cap, but less than 50% of the market cap of Bitcoin, is a pretty big deal there. So there's that, and then there's another chart here of comparing kind of like the transaction fees to not just protocols, but also DeFi apps and things like that. Comparing it to Visa, so Visa does $24 billion in total fee revenue last year. So Ethereum's catching up, right? Ethereum already beat Stripe. Stripe does $7.4 billion, and obviously now, after August, most of that fee revenue is being burned, 70 to 80% of it, which is absolutely insane, right? Like, this is revenues for Visa and Stripe, right? That goes, that's not profit, right? Like, that's revenues that go to kind of like paying for staff, paying for equipment, paying for maintenance and servers and all that sort of stuff there. Whereas this kind of like $10 billion, if you want to say that, extrapolate that out and say, okay, well, 1559, if it was live for the whole year, $7 to $8 billion of that would have been burned. So crazy. And then going down, you can kind of like see some layer 2 stuff here, like cumulative transactions on layer 2 is up at over 500 million here or something like that there. You can go down and see kind of cumulative transactions on, this includes Ethereum L1. So you can see cumulative transactions of Ethereum L1 and L2, which is like about 500 million, but maybe over 500 million here. And then you can see just L2 on its own is up to almost 100 million. I think that's about 85 million there. So, and it really only started in July. As I said, the second half of last year was when at layer 2s really started kind of taking off, and they went live and stuff like that. So some really cool stuff there. Some stuff around the creator economy and how much kind of like creators are earning on the platform. So, artists, musicians, writers, and other creators, obviously got to do with NFTs. I really liked this little picture here that says who makes a living in crypto. You can see through the years, like, who's making a living now. Well, in 2021, investors, developers, crypto companies, and artists, musicians, writers, gamers are all making money in crypto these days, whereas the previous years, it was just like investors, developers, and crypto companies. So very cool to see that. Some coverage of core protocol upgrades like 1559. You can see a nice chart here of 1559 adoption through time. And yeah, anyway, I'm going to let you guys give this a read yourselves. As I said, highly recommend it. If you read anything this week, make it this. And I guess kudos to Josh Stark and Evan Van Ness for putting this together. They do this every year, by the way, for the last few years. Always love reading them. But as I said, this got me super, super pumped today for the past, present, and future of Ethereum. So speaking of 1559, Vitalik shared a paper today that was done by some researchers at Peking University and Duke University on the consequences of EIP 1559. And Vitalik says here, I particularly appreciate the confirmation that EIP 1559 has greatly decreased average waiting times for transactions. And then he shares this little chart here. Now, this is one of the other benefits, or at least kind of like a major benefit of 1559. Obviously, we had the kind of like burn that everyone focused on, but I've gone through before the other benefits of 1559, like better fee estimation, decrease the average waiting time for transactions because of that, so you don't have to speed up a transaction most of the time anymore, and there was a few other benefits in there as well. So really great to see some objective data on this. Obviously, there's more time that needs to go past before we kind of like say that this is an amazing fix or kind of like does what it says it does. But I mean, I think it's been 6 months so far, and we can obviously see some early data showcasing that it does what it says it's going to do. And the funny thing is that Ethereum layer 1 is mostly bots today, and like in the near future, especially as more people migrate to layer 2, it's going to be basically 100% bots. And these bots are basically going to have like very fine-tuned ways to pay for transactions on the Ethereum network. So it really is going to be a thing where 1559 is going to help so much that, in theory, 99% or even more than that of transactions should never have to be sped up, and people can get the transactions into the next block as long as they pay the correct fee. Obviously, if you pay too low a fee, you're going to be waiting, but I'm talking about kind of like priority transactions to get into the next block. That should definitely get better, be in a really good place for these bots and things like that as well on layer 1 Ethereum. And the funny thing is that myself and a few of the, I guess, like other ETH OGs and whales that I know in the Ethereum ecosystem are now moving most of their activity to layer 2 as well. So even the whales are pretty much getting priced out. And this is because, like, when you think about it, it depends what kind of, how, what these kind of like whales are and how active they are. But for example, a few of them I know, they love to do kind of like trading NFTs and things like that. They love to do putting their stable coins into yield farms and kind of like re-upping their farms every day and kind of like compounding every day. If you have token rewards coming to you and selling those token rewards. But the thing is, if you're doing that every day on layer 1, it's going to cost you hundreds of dollars in gas fees, and it's not even going to be worth it. Obviously depending on the size that you put in there, but it's not going to even be worth it for people who have millions of dollars in there to re-up it every day, because the gas fees just eat into it like crazy. So these people are moving to layer 2 as well, because layer 2s now have more to do. On Arbitrum and Optimism, they've got a lot more apps on there, which I'm going to go through in a sec as well. Some major apps went live today, but essentially, I think, as I said, layer 1 is really not even going to be whales anymore. Like, maybe mega whales, like people who have like a shit ton of money, like maybe tens of millions, if not hundreds of millions of dollars. But mostly it's going to be bots doing MEV stuff, doing arbitrage stuff. Layer 2 is obviously posting their core data and proofs to the layer 1 network. But anyway, if you're interested in reading this research paper, it'll be linked in the YouTube description below. So 3 Aave updates today. So Stani is teasing Aave's L2 strategy, where he says the current Aave L2 strategy is Aave Protocol V3, Aave Governance V3, and Aave Redacted V3. I wonder what Redacted V3 is, because I know that Aave is building a mobile wallet or a wallet in general, but I don't know if they'd call that a V3 wallet, because they haven't even had like a V1 or a V2. So I'm wondering what Aave Redacted V3 is going to be. Maybe, I don't know, maybe it's kind of got to do with the institutional stuff that they're doing. I don't know. I'm not sure. But this is cool. I'm really loving the fact that Aave is stepping up on their kind of like L2 game lately. And you can see here, a related update from Emilio from Aave here, that they've kind of got a proposal up on the governance forum right now to use SnapshotX from Snapshot Labs, which I'm going to talk about soon on StarkWare here. So as I said, Aave is getting very, very involved with the Layer 2 ecosystem, and that Argent kind of DeFi integration that was being teased was actually Aave. So you can now earn interest with up to 100 times lower fees than L1 by using the zkSync wallet. So you can see here GIF basically not depositing USDC, but trading USDC for a USDC, which is Aave interest-bearing USDC, and on zkSync here using the Argent wallet, which I think is really cool. You know, the fun thing is that, yes, okay, this isn't like an Aave integration where through your Argent wallet, you deposit USDC directly into Aave, but it's the beauty of DeFi is that you don't need to do that. All that needs to happen is that you trade your Aave for a USDC, you trade your USDC for a USDC, and you still get access to that same yield because of the fact that USDC is a yield-bearing token issued by the Aave protocol whenever anyone kind of like puts their USDC in there. So this is really one thing that DeFi uniquely enables, is those tokens that represent different kind of positions and different kind of things within the DeFi ecosystem. And it makes it really easy to do integrations like this without Aave having to deploy to zkSync, you know, as kind of like the core protocol, and then liquidity having to flow into that to, you know, for it to mean anything. What this can do is you can just tap into Aave kind of like liquidity anywhere, and this is part of Aave V3's roadmap as well, with their portal, where they want to have like A tokens flowing from chain to chain, L2 to L2, and you know, no need to kind of like fragment liquidity like that as well, which I think is really, really cool. So awesome to see this from Argent and Aave. And as I said, like Aave seems to be really doubling down on their L2 strategy now. I'm very much looking forward to seeing Aave V3 go live on both Optimism and Arbitrum, which has been kind of like teased for a while now. I'm sure they'll be going live relatively soon. So very, very excited for that. So OpenSea announced today with a bunch of different partners the NFT security group. So this security group has 18 different partners in it, 18 very involved kind of like apps, companies, services within the NFT space, such as, I guess, Foundation, Coinbase, Maker's Place, Manifold, MetaMask, Polygon, OpenSea, of course, Rarible, Zora, Wallet Connect. You can see all of them here. Not going to list them all out, but there's 18 of them. So, and the NFT security group is basically a group that's come together to obviously tackle security and safety challenges within the NFT space. Obviously, the NFT space is bringing in a lot of newer people, and there's a meme going around that a lot of these NFT people give away their seed phrase because they don't know what it is. I've made some jokes about it on Twitter before about the Bored Ape holders. They seem to give away their seed phrases and lose their Bored Apes and other NFTs quite regularly. Now, as much as, you know, we all laugh and it's a meme and everything, this is a real problem for adoption. Like, I like Argent's approach to it, where they're basically saying, you know, we need to get rid of seed phrases. We shouldn't be showing users seed phrases at all. And I agree with that approach, because at the end of the day, this kind of like seed phrase, a lot of users can get tricked into giving this away, just like they've been tricked into giving away their password for decades now in the Web 2 world. So if we get to a point where we can remove seed phrases, or at least kind of like have so much education out there that we can reduce the number of people who are just like willfully giving their seed phrase or secret phrase, whatever you want to call it, away, the better. And it's not just that, there's a bunch of other kind of like security practices for NFTs and just for crypto in general that are going to be worked on. But I think the seed phrase is a major thing, because look, when you kind of like just look at the reality of the situation, if you give away your seed phrase, those words, 12 or 24 words, have access to all of your kind of like wallets, which means that it's basically your private key, right? Which means that anyone you give that to has access to everything you have, not just one asset, all the assets. So if you have an Ethereum kind of wallet, whether it be on your kind of like hardware wallet or MetaMask or some other thing, and you have ETH in there, you have stablecoins in there, you have NFTs in there, you have other tokens. As soon as you give away your seed phrase, or as soon as your seed phrase becomes compromised because you put it on your computer and someone's kind of like stolen it, the smart kind of like hackers are going to drain everything instantly, right? And you're going to lose everything with zero recourse. There's nothing you can do about it then, because obviously once a transaction has been done and confirmed on the Ethereum network, you can only roll it back if you have, control of the chain, which obviously is not going to happen. So from that perspective, again, just a warning for everyone, please never, ever, ever give your seed phrase to anyone. Never write your seed phrase on your kind of like computer and write it down and save it in a text file, even if it's password protected or anything like that. Never do that. It's one of the most dangerous things you can do, and it's also just bound to get you wrecked eventually. So if you do have to store a seed phrase, because you do get them with hardware wallets and you do get them with something like MetaMask, always write it down physically and store it somewhere extremely safe. But also you want to make sure that you kind of like go beyond that, depending on how much you have as well. If you have a substantial amount, you can kind of like split up the seed phrase, give like half to your parents and keep half yourself to keep safe, but also keep in mind that you have to trust them to keep that safe as well, because not that it could get stolen, of course, but like I think the bigger risk is that they just lose it or they forget where they put it, or it gets damaged, or kind of like it gets thrown out or something like that. So these are the things to consider, but this is again why we shouldn't really have users kind of, I guess, like being faced with seed phrases and secret phrases and things like that. It's definitely a big deal that we need to kind of like deal with. So I'm great to see that OpenSea and a bunch of other companies and services and ecosystem participants have introduced or launched this new NFT security group to help everyone out here. So as I mentioned, an update from Snapshot today. So they've introduced SnapshotX, which is basically a iteration of Snapshot, which is their upcoming on-chain voting framework for trustless execution that is going to be deployed to, I guess, StarkNet. So this is being worked on in collaboration with the StarkWare team. It was previously known as StarkVote. I'm pretty sure I covered it when it was called StarkVote, but now it's called SnapshotX. So here's a description of what SnapshotX is. Basically, SnapshotX is a voting framework built on StarkNet, the layer 2 zk rollup. It will allow any DAO to run their governance on-chain on layer 2 and execute transactions on Ethereum. That's very, very cool, right? Like I've talked about this before about how people are getting priced out of doing governance things on layer 1 because of the fees. So if we can do governance at layer 2 while still executing it at layer 1, that's awesome. And that's exactly what SnapshotX wants to enable here. So very, very very happy to see that. But also Snapshot is good on layer 1 too, because of the fact that you can just sign a message. You don't have to actually do on-chain transactions. So it's already obviously free to do, because signing a transaction, signing a message is free. But like if you want to go beyond that and kind of like execute these things on-chain and stuff like that, that's when it becomes expensive. So cool to see this. Definitely go give this blog post a read for more information about SnapshotX here. So Polygon, their POS chain is integrated EIP 1559. So obviously, EIP 1559, as I just talked about, brings with it a bunch of upgrades, like better fee estimation, better fee market, things like that on Polygon, Polygon's POS chain here. And I'm pretty sure they are burning Matic as well, but obviously because fees are much cheaper on the POS chain, the burn is much less. I think they're burning, like I remember that I talked about this on the refuel. They were going back and forth about like burning or not burning. Oh no, they are. Okay, so they landed on burning the Matic token. So, but yeah, it's still cool to see. Like I can't wait to see some kind of like dashboard sprung up around how much Matic token has been burned, but I doubt it's going to be much. As I said, sorry, what was I saying? I was saying that the fee revenue is quite low because of the fact that the transactions are low. And the funny thing is that doesn't mean the activity is low. The activity is actually pretty high on the POS chain, but don't expect like Ethereum levels of burn, right? Like, I mean, I'm pretty sure the POS chain does like 1 to 200K worth of fee revenue on any given day. Compare that to Ethereum that does like $50 million a day. Yeah, there's just really no comparison there. But, better than nothing, but also you get those usability and UX benefits that come with 1559 generally. So very, very cool to see this. I can't wait to see kind of like how the Polygon fee market evolves from here as well, because they obviously had a bunch of issues with bots and things like that too, and spam. So I'm curious to see how that gets kind of like handled under a 1559 world for the Polygon POS chain here. So Curve Finance is now live on Optimism. So you can go to optimism.curve.fi and play around with Curve on there. Just another app that's gone live on Optimism since they removed the whitelist. They were already live on Arbitrum, of course, and I think they were live on zkSync, or at least they had a testnet implementation on zkSync. So Curve's moving fast. They're obviously live on some other kind of like EVM chains as well. Makes sense for all these projects to deploy to basically every EVM chain. I'm curious to see long term kind of which ones hold the most usage and the most activity. Obviously, my bet is on layer 2s because they're just objectively better from a speed perspective. But like from a transaction fee perspective, longer term they'll be better. But for now, I mean, obviously optimistic rollups are still a few dollars for a swap and things like that. Whereas some of these kind of like cheaper centralized EVM chains are very, very kind of like low fees there. But as I said, rollups are going to get to that point eventually when we have things like EIP 4488 and sharding in place, but it's going to be on a kind of like longer term thing there. So just another thing for you guys to play around with on Optimism though with Curve. Both Optimism and Arbitrum's ecosystems are pretty much, I wouldn't say they're kind of like on par with Ethereum L1 yet, but they're getting there. Like they're getting there very quickly. As I said, Aave V3 is getting ready to be deployed on both of them very, very soon, I'm sure. And then once that happens, there's only a few other things that need to happen. I mean, Uniswap's already live on there. Curve is live on there now. They have their own exclusive apps. Like Optimism has stuff like Lyra. Arbitrum has stuff like Dopex. There's their own kind of like native ecosystems developing, like Magic or Treasure on Arbitrum as well. And on Optimism, the synthetics ecosystem seems to be doing very well. So these things are coming together really, really quickly. And I did tell you guys, like, it's kind of like a slowly and then suddenly thing where you think it's happening really slowly, but then suddenly there's all these apps available for you. You're bridging across. You can just stay on L2. There's no need to go back to L1. And we also have now with Binance integrating Arbitrum deposits and withdrawals. That's just the beginning. So really, most of us I guess maybe this year even, probably won't be touching L1 very much at all, if ever again. And there's no reason for us to, right? The L2 migration is well on the way. As I mentioned earlier, I have a lot of ETH OG friends, both whales and not whales. I mean, it depends what you consider a whale, but, both whales and not whales there, migrating a lot of their stuff to L2s and being like, it's time. Like L2s are finally where we need them to be, and people are kind of like happy to kind of be on there instead of just being on L1. And the funny thing is with my activity, I noticed my activity go down a lot because of the L1 gas fees. Like I only do my kind of like weekly things. Like I have a few things I do each week, but like most of my activity I tried to keep to L2s these days as well. But I mean, it is always hard to migrate across depending on what's happening, because you may have some farms on L1 that you have to unwind and then spin them up on L2 again, and you may have to wait for things to be live as well, because there may not be everything you need. For me, the reason why I haven't moved a lot of my stuff off L1 yet is the fiat on and off ramps. I don't use Binance, and the exchange that I use for fiat on and off ramps may not be supported for a while, so I may have to use Binance if I want to get off L1. Go to Argent from now or something like that. But it'd kind of be kind of like, I mean, I would save some money, but what would have to happen is that I'd have to kind of like do my stuff on Arbitrum, for example, or Optimism, or whatever other L2, and then kind of like send those funds back to L1 so that I could send them to an exchange in order to trade it for fiat. And you guys may be thinking, why is he going to fiat? Taxes, unfortunately. I hate that I have to go to fiat, but I have to for taxes. Like, almost half of it goes to taxes, which is obviously super annoying, but it is what it is. So that's why I have to kind of like go to centralized exchanges. But I'm hoping more of them obviously support things like Optimism and Arbitrum, so that I can myself get most of my stuff off L1 and go to L2, because the fees, the fees, like, I can look. People always have this meme that kind of like the early ETH holders, the people with lots of ETH, don't care about the fees because they made a lot of money off ETH, they have a lot of ETH, whatever. But this is wrong for two major reasons. One, I don't like spending thousands of dollars in fees. Like, that's still thousands of dollars. It doesn't matter kind of like how much money you have. That's still thousands of dollars that you're spending unnecessarily if you can do that stuff at L2, which you can do a lot of it now. And two, it's ETH. So I'm essentially giving up ETH, right? Like ETH that I believe is going to be worth more in the future. So if I spend $1,000 on gas fees in a month, for example, because that, if you're a regular kind of like on-chain user, $1,000 in gas fees on layer 1 a month is on the low end of stuff. Like you could spend much more than that. What happens if ETH goes, or when ETH goes like, 4x from here or 5x from here? that $1,000 suddenly becomes $4,000 to $5,000. Like, and kind of like when you really think about that, and you kind of like take all the ETH that you've ever spent on fees, kind of like over the years, and the price point that it was at that point and what it is today, it hurts. Like, I went back and I looked because for my taxes, I just went back and I looked through it all, and I'm like, holy shit! Like, I spent so much ETH when on gas fees when ETH was in the $100 to $300 range, because I was doing stuff on. There wasn't as much to do on chain, but I was still doing stuff, and obviously fees were much cheaper then, but like if you were doing a lot of things, you would still spend kind of like all this ETH. And then obviously when ETH went higher and like $500 or something like that, the fees started spiking. But even then, like I look back now, ETH's over $3,000. So any ETH that I spent on fees at $500, it's gone up 7x since then. So if I spent like, I don't know, $5,000 worth of fees, or it was more than that. It was much more than that during DeFi summer. And DeFi summer happened when ETH was like around $500. Like, I think ETH, when DeFi summer started, was only like $300 or something like that. So between $300 and $600, I spent like, tens of thousands of dollars during DeFi summer. And you go look back on that now and what ETH is today, it hurts, right? So when people say, oh, the ETH OGs don't care because they have so much ETH, it's like, well, they do care. They don't want to have to spend like all these this money on fees, and just because they can afford it doesn't mean they want to do it. And that's why a lot of them are moving to L2. That's why I'm trying to move as much of my activity to L2. And I think, as I said, like L1 fee, as I've said plenty of times, L1 fees are not coming down anytime soon, guys. Like, they're going to keep getting up there, especially as these L2s start competing for block space as well. So yeah, just a bit of a, not a rant, just a bit of a kind of like thing that I've been thinking about lately, because I'm just like sick of these memes, right? Like these memes that people think, like every time like I talk about fees on Twitter, I get this just reply guy saying this sort of stuff to me. It's like, oh, you're a rich ETH OG, you don't care, you have so much ETH, you don't care about the fees. It's like, I mean, I do. I do care about the fees. Like, I don't want to be spending these. I don't want to be, using my ETH even if I don't have to. And yes, I know that it gets burned, right? And that's, in some way contributing to the value of future ETH. But that's not the point. The point is, like, I want to keep as much ETH as possible in my pocket because I love ETH. I want to stack more ETH so I can stack more validators. And I think that's the same for everyone, right? It's not just the pain of paying the high fees. It's also the pain of paying the high fees in ETH. Now, I know some people replenish their ETH after they've paid it, like by buying new ETH. But the thing is, like, when you think about kind of like tax implications and stuff like that as well, it gets messy depending where you are. But I know some people do that too, which I guess like is a solution-ish. But like, yeah, I mean, if you don't have spare kind of like cash lying on the sidelines and you wait a few days until you have spare cash, then ETH price goes up, or is different from where you kind of like spent that ETH, it becomes a bit messy there. But anyway, I'll leave it at that. Last couple of updates to get through. There was a critical vulnerability in the Multichain, or previously called AnySwap bridge, affecting 6 tokens, WETH, Peri, OMT, Wrapped BNB, Matic, and AVAX. So if you have any of kind of like approvals with the Multichain contracts, you need to go revoke these approvals before it's too late, because this is still being actively exploited. So you can check this out. It'll be linked in the YouTube description below. I'll link the blog post for all the details here if you ever use this. I don't even know what these tokens are, like Peri, OMT. I know the rest of them, obviously, but I don't know what these two are. But if you're affected by that, definitely go check this out, right now even. Maybe I should have talked about this at the start, but yeah, I'm sure if you kind of like involved in this, you probably saw it by now, but definitely go check this out. Final thing to talk about, Sam Richards from the Ethereum.org team put together some kind of like stats and some growth stats from Ethereum.org. So Ethereum.org received 20 million visits in 2021. Huge, right? 5 times the traffic it received in 2020. 68 people are contributing to the project on GitHub, which is 2 times the 30 contributors in 2020. And 3,500 translators joined and translated nearly 3 million words, 7 times the people and 10 times words translated since 2020. That's insane. Like, that particularly to me is insane. 3,500 translators. Man, that just really speaks to how global Ethereum is, right? Like, and the Ethereum.org website is available in many different languages, which I absolutely love, by the way. I hate that so much of kind of like, I guess, DeFi interfaces and things like that are only available in English. Ethereum is global. Crypto is global. Let's start getting, these things available in different languages. I know it can be difficult sometimes if you don't have translators on board, and kind of like getting things translated can be quite costly. But a lot of these DeFi projects have massive treasuries, and spending some of that to translate the website into at least the most popular languages, maybe the top 10, would be well worth it. But anyway, great to see this growth from Ethereum.org. As I've said before to you guys, Ethereum.org used to be kind of like basically useless. Like, I think that's the best word to describe it. In, I think, 2019, it was absolutely useless. It was old, outdated. Hadn't been updated since like 2015. Then a new team came together and have been absolutely crushing it. Like, absolutely crushing it. The Ethereum.org website is one of my favorite websites in crypto, and one of my favorite websites just in general, right? Because it's just such an awesome site to go on. There's tons of information and resources there. I love the artwork. I love everything about it. But enough gushing from me. Congrats to the team there. And I think I'm going to end it on that for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.